The next stock in focus is SpiceJet. The stock is under pressure.
SpiceJet has now decided to send about 80 of its pilots on leave without pay for
पहला एक लाल स्टॉक वो है रेड में शायद ट्रेड करता
severe
हूं
balance sheet crisis. So we've been reporting this for the last several months. And the need is
A decade of losses, mounting debt, regulatory scrutiny, and amongst all this, SpiceJet announced its biggest profit in a decade in 2024. But is there more to the profit than what meets the eye? To understand the story, let's go back in the history of the airline.
We think that we are well placed to take on the world, to grow profitably.
SpiceJet always seemed to have been stuck in some financial trouble or the other since chairman and managing director Ajay Singh started the airline in 2004. It turned into a financial mess in a decade. Back then, flights were getting cancelled. Passengers were stuck at airports and was on the verge of closure in 2014. To turn it around, Ajay Singh bought out Sun Group's stake in the airline in January 2015, and it seemed like the aviation firm had weathered the storm. But a decade after that, the history of its troubles repeated in 2024. Flights were getting cancelled, leaving passengers in the lurch. From over 17% market share in 2014, the firm's market share fell to a historic low of just 2% in September last year. Back then, global analysts were skeptical. As early as September last year, barely a few days before SpiceJet's 3,000 crore rupees fundraising through Qualified Institutional Placement or QIP, a prominent global research firm, HSBC, slashed its target share price by 58%. Back then, the bank had cited an unsustainable financial model as the main reason. SpiceJet's small market share, capacity expansion, profitability and valuation were the other issues for HSBC.
Many of these institutions which have given money in this QIP, they have not even put in 0.25% in this QIP of overall their bank book. I don't want to give any number to SpiceJet, but I'm saying for the timing, they have survived. Let's see how they will shape up in the future.
India's airports have doubled from 2014 to 2024, and they're supposed to double again probably in another 10 years. So that's a lot of airports coming about. So those people have not invested into SpiceJet per se. They've taken up a stand for the Indian aviation industry, which is going to grow.
There were 86 LOTs in the QIP for SpiceJet. The highest, 9.3%, was allotted to Altham Investment and Infrastructure Limited, promoted by the family of controversial stock market operator Sanjay Dangi. For now, SpiceJet is flying, but with SEBI's wings.
SpiceJet, in an email response to our queries, denied any accounting maneuvers. The firm said the promoter group's stake increased from 29.11% to 33.47% due to a warrant conversion. On grounded flights, the airline said 4 aircraft, including a 737 MAX, have returned to service, with more expected soon. The firm said it has cleared 601 crore rupees in outstanding liabilities, including GST and TDS. SpiceJet aims to consolidate its market position with a strong financial foundation. Well, the full detailed SpiceJet response is available on our website. SEBI was also given a list of questions. They include, number 1, the role of SEBI in granting special exemption, the need for market transparency, the role of SEBI in monitoring promoter benefits, due diligence of QIP investors, regulators' action of distressed companies, and the role of SEBI in preventing Jet Airways-like collapse. SEBI is yet to respond to all these questions.